Hello, everyone. Welcome to Forward Focus. It is April 26th, and it is already the end of April. This year is just flying by. So, gang, we are going to take a look at what is going on in the market this week. And I am going to start by going through our major indices here. We have, whoops, we are on the wrong page here. Let's see. Hold on. Aha. I got to put up my lovely, here's who my charts are from. All that fun stuff. There we go. NinjaTrader and TradeStation are the two primary chart platforms that we are be using today. And this just reminds you, don't bet your kids' college savings fund, especially given how ridiculous college tuition is these days. All right, let's flip on over here to our stocks. I'm going to start with futures, actually. NQ. All right, largest time frame. We have been watching this widening megaphone here for quite a while. So once we got this kind of congestion forming right in here, where things slowed down, but we didn't get reactions. Like over here, you get this nice two-wave move to the downside. Up here, we didn't get that right shoulder formation at that midway point. Instead, it kind of crept higher, brought it up well past the halfway point. So now this slowdown and congestion is in an upper level. And what that means for the market is that it has an easier time trying to go for higher highs. And so this is where we kind of flipped our bias over the last couple of weeks, where in here we're like, it could go either way. You could see it going into a trading range like that. You know, you had other options until it got to about here and then broke through that upper channel. And that's where things change. We got the confirmation that indeed we were going for the tilted correction. So we actually still have a decent amount of room that the NASDAQ can still keep creeping higher, coming into this upper zone of resistance on this megaphone now. And so what we're seeing on a lot of the intraday charts here is that it's made things a little bit more difficult as far as trying to time decent swing trades and major market moves. So last week, what we were looking at was that a lot of the indices had come up to the upper end of this trading range here. We had this V pivot, basically a check mark type of pattern. What happens a lot of times with the check mark type of pattern is you'll actually get a rather rapid flush to the downside. We saw a similar thing happening over here, where it flushes to the downside. Not that it totally reverses, that you just get a flush to the downside. But what we saw happening in the early part of the week was that it really should have gone about here, and instead it went into and continued to hold this range, but it held that upper zone of the range. Let me go down even a smaller time frame, because this is really important here what this did. I don't run the 15-minute. Let's see, I accidentally probably deleted my 240-minute chart. Let's go down and look at this here. So this is what's really important. I'm actually going to go draw a line tool so that I can draw it straight for you. So this on a breakdown should have gone here. This is kind of your do or die point for a breakdown. You get kind of even spaced corrective type of moves in here. So this is the do or die point for the breakdown. And what you can see happened is that we started to see a lot more trading action above that mid-range level. So in that mid-range level, now you're getting some slower corrections. You're getting this two-wave move that's hugging the upper end of the channel. And what we saw a couple days ago was intraday on the S&P 500, we actually had a nice little two-wave correction. We followed this in League of Traders, and that triggered the larger breakout for the overall market. And we just basically saw that continuing here. Going into yesterday, we were hitting the 61.8% extension. Let me open up the intraday charts here today so you can see what we've got going on. I rebooted, so I've got to do my reconnection here. So you can see where we're at right now. So what we saw coming up into yesterday's session was here was the 50% extension of this move. So right up at that level, what we were looking for originally was a base at this point, basically something that would repeat this type of move. But intraday, the momentum started to shift. We ended up with a bit of a bigger pullback here. So it continued to hold that 61.8% extension. Let me get this chart opened. Reload our data here so you can see what's going on here intraday. Basically, it's continued to struggle at that level, but it's not something that has shifted the larger bias to try to continue higher. So what this means is that I would suspect we'll see, these kind of shorter intraday corrections, and as it gets up here to the upper end, probably more of the choppiness opening up back and forth, like what you saw over here. So notice even though this was coming up for a third test of high, it kind of slowed and chopped along at the high. That's not unusual for that to try to do that as well. But at that zone, I'll be looking for pivots again, bigger pivot plays. This has made this whole upside move more difficult for a lot of swing traders because you're not getting some of the larger typical corrections that we usually see. You're only getting these shorter little minor corrections, and it's been a little trickier. All right, let's see if the other ones have loaded here. Yes, nope, let me reload this. We can look at our trade station here while we're waiting on that. So here's our Qs, and like I said earlier, that 61.8% extension, that's where we're seeing that holding right there. And as you can see, this is pretty steep upside momentum here. So what I'm watching for at this point is this can go and form almost like a 2T type of pattern that's kind of on steroids, where you've got your two-wave move coming out of the low. So the difference is that you don't have a higher high here before it goes into the correction, but that can still lead to a widening up at this level. So this extreme move, it's not as often likely to give you the really sharp trend reversals, but it will start to try to widen things up again as we get up into this zone here. So getting a little bit longer corrections, it can even go through more of a price correction and still keep going on the larger time frame. But we are at a level that that type of exhaustion can set in very easily. The ideal for that is that you get to that measured move and then look for bigger intraday setups for reversals. So that means we still need to see more of a recovery here on the intraday charts for that to really be able to develop. Let me show you our spider, and we'll go back to our futures here. So spider, which is our S&P 500 ETF, you've got that same channel at highs We don't have a break of the channel yet. So it's kind of at a do or die point as well. It needs to hold here in order to get that next swing up, or it's also at risk of that flush type of move. Right now it is holding at the upper end of the range. So we're just testing it basically the third time, 1, 2, 3. So this is the level that is the do or die point to try to get that breakout for that continuation on the spider here as well. Diamonds having a little bit of a harder time. So shift in momentum right here. It's also at do or die spot because this is going to try to go and help out the other indices. It needs to hold here with this two-wave correction and treat this two-wave correction like it's a tilted one. Problem is that these pullbacks are strong. So it could have a little bit of a harder time trying to get off the ground to do that. But it's also a pretty key support here on the intraday charts. IWM still trying to hold that messy inverse head and shoulders. Again, if we look at the time development, kind of base this out here, it's kind of hard to see. Given the extent of the size of this move up, this really isn't a lot of correction. So even a breakout like that, you're more likely to see it get stunted here and kind of have a little bit of a harder time. So you want to watch that momentum as it tries to break. These aren't the cleanest patterns right now. We're kind of gone off template base on these larger daily and intraday charts. The smaller intraday charts are still holding some decent patterns, but the larger ones, you can tell there's a lot more conflict, not as much assurance. So we are still at the midway range on this IWM. Widening up, still has room to try to keep going on the upside, basically with the other indices, but we don't have the greatest continuation pattern in here. Things like a little bit of a better symmetrical triangle or a nice two-way correction. Those are easier for timing, but we only have one main pullback on that weekly chart. So a second pullback would actually help give us a stronger setup for the upside. We just do not have that forming yet. If we put our fans on here, I'll show you guys where we're at as far as support levels go. We are right at just the 50% correction here. So it's really not that strong of a fan zone. We see the 50% break a lot. I'm going to be basically taking these day by day here as we go into the next couple of weeks, just with the way things are creeping, watching for something that can be forming on the 240-minute time frame, but I don't have a strong setup for anything right now. On the 240, what you'll notice is that we have a little bit of this widening wedge here. So this is what we were playing yesterday off of the upper end of that wedge. But because of where the trend placement is on this, that pullback can just do a minor pullback or even a minor break and then still come back into the range and not fully break out of the larger range. Let's go look at the Forex market. We didn't get a chance to do this too much last week. So basically the thing to keep in mind is my overall bias is that we're still going to try to head higher. We do have a lot of securities going through the individual indices where they are at trend exhaustion levels, but they hit those levels of resistance so hard that even minor corrections, they can still go and retest them and still even push for slightly higher highs. So what we're probably going to see in a lot of securities is just kind of slow down, things starting to try to roll over. A lot of the earnings gaps on the downside are going to be ones where you'll get that upside move, you get the downside gap. A lot of them will try to come up and pull up into that gap zone. So that's going to be what's happening on a lot of the earnings. We are starting to see quite a few that are breaking down with disappointment. On the euro dollar, we're getting that confirmation starting for the breakdown that we've been looking at over the last couple of weeks. So what we've been watching for on this euro dollar, this is a weekly time frame, is that this had that same mid-range zone type of issue that we've seen with a lot of securities. And it's been shifting the momentum to try to break to the downside out of this congestion. So just this last little shift here is what is offering that confirmation for breakdown. And we did start to see that initial break here on the daily time frame just over the last week or so. So over the last couple of weeks, what we were watching for on this daily time frame is the shift in momentum first here, then here, and then here. So it continued to change momentum where this was kind of a do or die point to try to hold and reverse. And instead, we got it coming in, formed more of the sideways range, and then offered the break to the downside. And so this is something I'm looking for, continuation plays on the downside as swing trades. And there's a good chance that over the rest of the year that we see some stronger downside movement on some of these as well. This is currently a little bit of intraday support, daily time frame support. Notice this impulse move here. It's pretty similar to the vast majority of these moves. So you're looking at support here as we head into the weekend. If you just caught that swing trade we were watching for, then this is the zone that I would take gains on it as just the swing trade if you don't want to hold through corrective type of moves. So dollar yen, this has been another one that's been a favorite of mine for trading recently. Probably my absolute favorite lately. I think I've put more trades on in this than anything else recently. Forex monthly time frame on this, on the dollar yen, we're just in this symmetrical triangle. So this is getting to a point where it's going to break. Got your downside trend line, you got your upside trend. So we are at the apex of this symmetrical triangle. It's going to break out. Now what tends to happen with a breakout with symmetrical triangle like this, a lot of times it can break one direction, pull back, turn back around. So it can actually widen out a trading channel and make it into a more consistent channel so that the symmetrical triangle itself gets treated as one wave in a two-wave correction. So that's what I'm watching for on the dollar yen, is for that to go and try to play out so that you get some of the bigger two-wave corrective type of moves. Right now, it's favoring more of a false break to the upside, but you can get shifts that it can go the other way too. False break to the upside would actually be the most helpful to get this to go into a range to eventually break to the upside again. So what the bulls want to see is that scenario where this symmetrical triangle breaks to the upside, then pulls back. so that it treats this as the first wave and then that as the second wave of correction to try to go higher again after that point. Of course, we're looking at a monthly time frame here, so you're thinking in terms of like 5-year increments for that to play out. On the shorter scale, let's go look at the weekly. Here's what we got going on the weekly time frame. You can kind of see that symmetrical triangle a little bit better here. So in order to break on the upside, you would need to see this basically just kind of congesting along here or pulling back into that lower end of the channel, but doing it slowly. And that would help give you the break on the upside. So it has to react slow off of this upper channel in order to get that, to manage to do that. If you've got a strong reaction here, then it's going to break it because it will try to do that little two-wave move there. And that's more likely to be a trap, I think, if it goes and does that. I think it's more likely to be a trap than to try to turn around again. But right now, intraday daily charts, we do have the momentum facing a little bit towards the downside, but my larger bias is not to focus on that as much. So I would treat downside moves at this point more as something I would enter as a day trade, but be aware that it can go and break to the upside again. You're kind of getting like a false break here with it did a little bit of that inverse head and shoulders. So this can go into another base where it treats this as a one-wave correction, goes into a base here for a two-wave correction, and then tries to break again. And that would break that upper triangle as well. So I'm really, really cautious on downside plays here, even though technically your momentum looks like this. I talked about false breaks yesterday in the League of Traders room, in the chat room. We had really good examples of that where the market tried to break down too early, just like this one tried to break up too early, created a trap, and actually gave us a pretty decent reversal trade, and then turned back around again. And that's what we're looking for on here. You can go back and review all of the charts from that in the League of Traders alert platform. Posted some of them in the forum too, which all of you guys have access to. Just go to tonihansen.com/forum, sign up for an account on Telegram. The pound dollar here, kind of turning around now after this. So here's the 2B we had going into the year. Tried to do two-wave moves, shifted, getting a little bit of a breakdown right at some initial support here. Let's go back and look at the larger time frames. Okay, so what we were watching on the weekly is, again, the trend placement. The monthly I'm going to show you here first, though. So our monthly, we had the shift in momentum here. So this is trying to widen up a bit more. This here could really go either way. It can go into a 2B like that, where it goes to a slightly lower low. You could also see it try to go and do something more like that, where it's a bit of a wider 2B. So those are like the two main patterns I would be watching for at this point. Basically, both of them are versions of 2B, but one might go a little bit faster than the other. That's our monthly. So drilling down onto the weekly, both of those are possible still. So the larger version would actually treat this and hold this inverse head and shoulders and try to pull up a little bit more before it breaks, basically doing like a two-wave move up before it tries to turn it around again. Whereas the other one would treat this like a two-wave correction and break. So both of them have a little bit of downside action here, but it's really at a do or die point to determine which one is it going to do. Is it going to go with the faster breakdown, or is it going to hold right here where it is and pull to the upside? So on the daily chart, you can see that megaphone forming. Daily chart here, this holds here, that's going to try to go for that next move up. But if we get breakdown, like a little base here, breakdown, that's going to bring it down for the larger to be potential on the bigger time frames. Intraday, we are just right at measured move levels. So we're right at a widening zone. Do I put all my videos in the forum now? No, Pat. Most of the educational content I do is in the League of Traders main channel. And the forum is more dealing with questions and stuff. And then I'll post some of the stuff that I did live in the forum. I'll post them, or sorry, that I did live in the main channel. I'll post them afterwards in the forum to go back to take a look at. But yeah, you'll want to watch the main channel for the live chart alerts. Like for example, let me show you. So each of these market calls here, they were posted as charts in the main channel. And then I posted the full chart in the forum afterwards. So actually this was that false breakdown I was telling you guys about earlier. It had a false break. So I warned them that this could just do a flush, a wipe out and turn around. And some were watching on the upside. So I said, wait, do the 2B, then the Phoenix. So that's where you'll get that information. That's for League of Traders, folks. Let's go look at some of these other ones here. Dollar Swiss. Oh, good resistance here. The dollar Swiss has been kind of tricky for us because on the monthly time frame, it's just been in this kind of messy congestion here. Looks like it wants to try to push up out of this further. The way that this is forming on the monthly and the weekly charts, this is the type of action where you get a lot of false breaks. It's a much harder type of market to trade. So usually what I do is I just go down to smaller time frames and look for two-wave moves. And that's kind of all I focus on unless I see something that has like a really clean setup. Like we were watching, this earlier in the year is a little bit of an inverse head and shoulders, but it isn't the best example of it because of the way it's forming in the larger move. So what we're seeing is it's kind of doing a shift here. Could even go into like a 2T type of move. What we can see is that we are at an exhaustion level, just a short-term typical impulse move zone here. So likely to see this level slow. You can see it didn't have a core setup even going into it. It basically just had a tilted Phoenix right in here. tilted shallow phoenix is actually technically what I call this. So it's a shallow phoenix because it has the slower start, and then you're looking for a slower correction and then the more rapid pullout, breakout. But it's a slower tilted phoenix because it has the slower start, and then it has the tilted phoenix and then breaks out. That becomes the do or die point right here. It's a much more difficult setup to try to catch. So even though technically the strategy is in there, it's a lot harder to catch that type of move. So we're just right at some exhaustion at this point. Probably you'll start to see more of the back and forth action again now. So yes, Canadian dollar held that 76.4% support I drew for you guys earlier. And we are just right coming up into some initial resistance. This has room to still push a little bit more, but on the weekly time frame, again, trend placement just not very decisive. Weekly and monthly chart can easily go into a much longer range here. Wouldn't be surprised if this tries to turn around and flip to the other direction after this. Aussie dollar, this is a nice two-wave breakdown here this week. Again, we're also seeing this in a mid-range level on the monthly. Let me show you here. Just a bigger mid-range zone. So here's your previous upswing. So you're right at that midway level. Here's where we're looking for this to kind of pull back, but there's no core pattern again in here. So this could be just like a little trap again, just like what we saw yesterday on the NASDAQ. Tricky, let's see here. I don't see a reversal strategy on this yet though. Weekly. Monthly bias is still not, no shift in the bias here. So you've got, let me show you the momentum we've got going on. So you've got this, this, and this. This is the way the momentum moves are forming right here. So that gave the two-way break this week. I actually missed this one, wasn't looking at this one, but it also means there's no shift in bias yet now to turn this back around. So the bias is still on the downside as we go into next week. Maybe perhaps like another, maybe a two-way move like that. That's what I'd be looking for as the next target level on that. And then see if it can continue to round off at the lows at that point. So I think 1, 2, 3, where you get like just a little kneecap type of move in here. That's what I would be watching for next week in this one. This is our Aussie dollar. What are my thoughts on JNUG? Well, we're at measured move support here. We were already coming into this at the end of last week, right at previous congestion support. Weekly time frame. Basically, it's forming a channel like this. This is our current momentum. So main level of support here. This could react and break down again later, or it can just go and form a 2B. So it's a key point. If you're on the short side, I would take some gains off here just to see how this reacts off this level. Larger target though, I think you've got room that could fall back down into that level here, just with a continuation type of move. Can do like a kneecap here, and then offer that for further continuation. We often see a move that will start off a little bit slower like this. After it bounces off of lows, it'll start off a little bit slower and then gain momentum back to the downside, and that's what we have as a distinct possibility here on the weekly time frame on JNUG based on how it's reacting right now. It would basically need to form like a little base here as it reacts to do that. But I definitely think it has room for it, given the way the momentum has been playing out currently. You guys have some other questions on stocks you want me to take a look at? I'm going to pull up a chart on oil too quick. Not oil, rather gold. XLNX, really nice move continuation here this morning. I'm going to show you that fast. We were in XLNX Liga Trader breakdown. So this is a bull trap yesterday, coming off of a sharp, steep 2T. Closed up at the highs, gave short setups almost immediately out of the open, but then it offered nice continuation plays. And this hit measured move support here intraday. Let's see if I can show you like a 15-minute chart. Figure out where I've got it hiding in there. So we hit support here right away out of the open. Nice two-wave move here. Right into kneecap zone. So this is a good zone for this to try to, continue to stall and react off of this level. Let's see the other one, iRobot. This is another one we are in on the bull trap swing trade. Again, it's also at some support here intraday. You can see the three lows, 1, 2, 3, right at the open this morning. So we're at good levels to get reactions on this. These are things I think we'll continue to see creeping down as position trades over the next couple of months. Swing trades, the easiest part of that, those moves are both in right now just because of where we are with the extent of the move. You usually get some more back and forth chop action on both of those right now. So even when they try to go lower, you're going to see it do more of a choppiness type of move where you're going to get a lot more overlap bar to bar. Question on Tesla, and then I'm going to go look at gold. So Tesla had, again, where it's just that subtle shift that led to the break. This is really a mess. If this was going to go and hold up, this had the potential to try to do like a tilted Phoenix here, but it had to hold up here. It needed to hold up at this zone to have a really good chance of it. So right now you're testing the lower parallel levels and volume is pretty high, which is not typically what you're going to see to get a good continuation move. So yeah. Yep, XLNX, iRobot, they were both earnings plays. There were actually a lot more as well. ROL, RES, a lot of bull traps. They were on our earnings list, earnings playlist. So you're right at some measured move for support on this. I think you could probably get a little bit more wiggle room on the downside, but you are at an exhaustion level. Kind of see it too with volume starting to spike a little. I wouldn't go against this trend right now. Still keep the bias on the downside. I think you'll just see this slow down, maybe do a little bit of an intraday pause. There's definitely moves where it goes further. So it's not like it's at the larger impulse move exhaustion, but it is at just smaller intraday ones. All right, gold. So what we were watching on gold over the last couple of days is the 2B pattern. So you have your low, slightly higher low, went to slightly lower low, lower end of the parallel channel, shift in momentum here. So this is what triggered us a buy for us in gold. And we're just looking at this to push to continue into the upper end of that range. Four-hour charts were coming out of a tilted phoenix. Still looks good. You can see another smaller 2B yesterday, actually. Not yesterday, on the 24th, 2 days ago. So you're right at about 100% extension here on the tilted phoenix. That's this move here. Up, up, measured move. This can go to a 1, 2, 3 though. So I'm still bullish on this as we head into next week. But there's no, I wouldn't do any plays here for any new setups on this. McDonald's. My son's position on McDonald's is that it's awesome, but only because you get Happy Meal toys. We don't get to go there too much. So he would just keep buying it. We are coming up about, yeah, right, the toys. Oh my gosh. Right at 76.4-ish. There's a little bit more room here on the daily. I think you could get a little bit more wiggle room on the upside. Here you can see a nice example of a symmetrical triangle. Let's see, monthly. Monthly has some more wiggle room too. I would still expect that we're going to see some higher highs on McDonald's. We'll probably widen up as we hit that 200 level. You'll get more back and forth type of swings. He was hilarious. I was working through some charts and stuff last night in bed on the phone, and he's helping me analyze the charts. He has some really interesting terminology for it. Looking for pullback on McDonald's to 193. I don't know that I would short a pullback here on this right now. If it can push a little bit more, watch for like a smaller 2T. I would even go down to that. You need to go down smaller than the 240-minute chart though. I think you got a chance for some whiplash here. So maybe if you can find like a little bit of a bigger 2T pattern at that level, that would help turn things around a little bit better. Look at the Kiwi. That was a nice move. Let's see. So you're right at two-wave measured move support on the daily on the Kiwi. Nice little phoenix type of pattern coming off of this as it hit that measured move level. Pretty strong momentum on this. Let's go look at the bigger time frames. Oh boy. 0, 1, 2, 3, 4. There's our megaphone. Didn't quite make it down far enough to do the best rapid continuation. So I would like to see this base out more like that. Would not be looking for this previous low to break, but I'd be looking for an avalanche. So at this point, it can go into congestion on the monthly time frame. Shorter time frames. Let's see if that's same on our weekly. Yep, weekly supports that. So we're at a good retest of support in here to try to get this to pull back up again. Maybe a little slight retest of lows to kind of shift that momentum there so that you end up with something like that. Can help turn it around. But I don't think it necessarily needs it. I'd be much, much more cautious on the short side right now on this one. Children's Place was the earnings play a couple months ago, going into the year. Good two-wave move here. Not really see anything on this though that I would do at this point. Resistance. Tesco weekly is trying to do a 2T. So you're going to get a pullback off of this zone here. So I'd be looking for smaller reversal setups. On the 2T on Tractor Supply. Let's see, you guys have anything else you want me to take a look at? I looked at JNUG. Maybe you missed it. RTN. I'll get the replay up soon, though. You can just go to tonyhansen.com/Friday for the replay. So this is another one, RTN. I think you're going to get slower start, and then it can have a faster, sharper drop on the weekly charts. So what I would be cautious of for the bullish side here is that might go and do that with the way this is forming here. So really watch this momentum right here over the next couple of weeks, because right now it's going to be a lot trickier for the bulls the way this is playing out currently. Oh, you're short. Well, there you go. It may chop around here for a couple weeks, but overall, I tend to agree with you here. In fact, it's one, the way this is currently forming, it can actually gain that momentum. So going into like 158 wouldn't even be a surprise on a hold for a few weeks. TLT, bonds. Let me go pull up the chart on bonds. Oh, I thought I had one open, but I guess not. Oh, by the way, I measured move here on the Russell. Good resistance here. Okay, so let me change this over to bonds. Weekly, it looks like we're going to head higher. There's a bit of an early breakout attempt last month. So what I'm looking at is this is kind of a retest of the zone. So what I'm paying attention to is in here. We have a little bit of a faster break, kind of like the shorter little corrections. So retesting that and then trying to pull up again. And that can shift that momentum again into that zone. So I would go for this to this as a measured move on the weekly charts. Let's see if bonds opened. Here we go. ZB is forming a Puff the Magic Dragon formation. Okay, I am not aware of this formation. What is a Puff the Magic Dragon formation? Or the llama. Yeah, it does look like a llama. I see what you're seeing though. We'll have to rename this one. I'm trying to get it to load more data for us here. It's just a little slow. You're gonna have to study this one, Karen, and then let me know how we're supposed to trade the Puff the Magic Dragon. Yeah, here's his head. Now it needs to like shoot fire. Actually, I think that could happen here. We could get this shooting fire now. Right about to about here. Yeah, it does look like it wants to come in and close that gap a little bit better. So I think on our short-term time frames, we're going to be heading back up. Loch Ness. Yeah, around there is what I would look for a buy on it. All right, gang, I'm going to wrap it on up here. So thank you for joining me here today. And I'll get this posted up as soon as we possibly can so that you can go back up and review it. So just check back at tonyhansen.com/Friday, and that will just link you to the replay. All right, you guys, have a wonderful weekend, and I will see all you lovely people back here next week.